Well, the Fed just hit pause on interest rates. So what does that mean for the housing market? Are we going to see some relief in sight? And I'm sure you've heard it all. The housing market is going to crash. Don't buy a house at all. Anyway, we're going to cover some things today that are factors right now in our current housing market. And I would like you guys to leave some comments down below as we go through this and tell me what your thoughts are on the current housing market. So here we are, 2024, and definitely mixed feelings about the housing market. And I'm going to go into what the expectations are, and also I will venture back in time and get you some crazy stats on where things were, but so comparable to now, so you'll want to stay here for more of that. According to Redfin, home sales rose 4% in December, the biggest increase since September 2021, and the highest level in more than a year. So why did we have that increase? Well, a lot of it has to do with the dip in the interest rates that we have had here lately. First time since August, rates on a 30-year fix dropped below 7%. And an example of this, a home priced at $400,000 has a principal and interest payment of $2,118 a month, as earlier in the year at that same price and a rate at around 7.79%, that payment was actually higher by almost $200 a month. The Fed announced at the end of 2023 that it will hold funds rate steady for now. We heard potential rate cuts up to 3 to 5 times in 2024, depending on who you listen to. So what will that mean for the springtime in real estate? Well, as we start 2024, more homes are hitting the market and more buyers are out looking, as rates are in the mid 6% range as compared to 8% back in October 2023. With all this, here's an interesting fact according to Redfin again. 89% of people with a mortgage have an interest rate below 6%, and that's actually down from 93% in 2022. So these percentages, they've come down, but it still shows that most are staying put, while others with those low rates are biting the bullet and selling anyway, as some have just major life events, or they just want a different home, or they're moving to a different city. Of these homeowners, we also need to take into account the prices soared during the pandemic, and they have substantial amounts of equity to justify the higher rate on a new purchase, especially those moving to another city with the lower prices. Now, I have a real example right now of this. My listing here in Littleton, Colorado, my clients are selling and they're moving to Iowa, and there they're going to pay cash. And they're going to have a substantial amount of money left. And again, they're not going to have any house payment at all. Now, at the end of 2023, the U.S. median sale price was a little over $403,000, according to Redfin. Still, a 4% increase year over year on those prices. Now, the number of newly listed homes at the end of December 2023 was down 0.54% year over year at a little over 274,000. Again, this is according to Redfin. Now, let's go back in time to 1995. Yes, 1995, a year when Seinfeld and Friends were the most popular shows, and O.J. Simpson's Trial of the Century, along with Michael Jordan, returned to the NBA, and the internet took off, most importantly. So why do I even bring 1995 up? Well, according to the National Association of Realtors, or Realtor, however you want to pronounce it, at 4.09 million, the existing homes pace of 2023 existing home sales is the lowest number recorded since 1995, when it was 3.85 million. Now let's look at that comparison. According to NAR, the U.S. population is 336 million people as to 266 million in 1995. Now we dive even deeper, and again, this is according to NAR, in December of 1995, we had 1.58 million single-family homes available to purchase compared to 870,000 at the end of December 2023. The monthly supply of homes in 1995 was 4.8 months, and it was 3.1 months in 2023. The median annual existing home sales prices were a little over 114,000 in 1995 and 389,825 in 2023. Now, the interest rates were around 7.11 at the end of December 1995, and in December 2023, they were around 6.61%. Now, for an even crazier stat, only 2% of home buyers actually looked for homes online in 1995. And last year in 2023, it was 100%. Anyway, I thought some of you would like to hear some of those comparisons. Now let's get back to 2024. Even though existing home sales bottomed out in December, NAR's chief economist Lawrence Yun said, brighter days are ahead. And although the dip, the median price reached an all-time high of $389,800. Yun goes on to say, quote, the latest month sales look to be the bottom before inevitably turning higher in the new year. Mortgage rates are meaningfully lower compared to just 2 months ago, and more inventory is expected to appear on the market in the upcoming month. So does this mean those with extremely low rates are going to start listing their homes in 2024? Those homeowners are seeing their equity continue to grow at a high pace. In fact, Yun says 85 million homeowners saw gains in housing wealth just last month. And CoreLogic's equity report states U.S. homeowners with a mortgage built more than $300,000 in equity since purchase. That, my friends, is astounding. I have to admit, I am one of those, as I have some rentals that are locked in at the upper 2% rate, and no way am I having any urge to sell currently. With all that said, the home builders are really affected by this, as they cannot keep pace with all the demand. Yun says, quote, the recent rapid 3-year rise in home prices is unsustainable. Prices continue at the current pace, they could accelerate into the haves and the have-not, and creating a path towards home ownership for today's renters is essential. It requires economic and income growth, and most importantly, a steady buildup of home competition. Now, new construction continues to be a big issue. Production swings month to month in the building industry, and according to the Commerce Department, they reported that housing construction fell 4.3% in December 2023, but remained above 1 million units. Now, one thing to note, single-family housing permits, which gives an indication of future construction, had an upward tick in December. So things point to more new inventory on the way. Now, Alicia Huey, the chair of the National Association of Home Builders, goes on to say, it's likely to be a challenging year for new home construction due to the higher mortgage rates and tight monetary policy. Economists, for the most part, say we should expect a turnaround in 2024. But if we do see lower rates and there is more affordability with home buyers, will home sales that declined in the last few years, will these prices increase as well? Well, time will tell. And one thing that everyone can keep an eye on, though, is inflation. Inflation can still be the thing that can have a huge impact on the optimistic real estate forecast. If inflation numbers don't improve, long-term rates can rise and likely keep homeowners from selling. And on the other end, home buyers may just stay on the sidelines and continue to rent. So early on in the year, things are really in the air as to where the housing market is going. With the amount of homeowners locked in at these low rates and not selling, buyers fighting affordability challenges, and the limited inventory, the market will remain a challenge. Now leave me your comments below. And if you have questions on buying, selling, or investing in real estate, my contact link is down below. I'd like to connect with you anytime.